we are very opportunistic. We bought value-add deals ranging from 90s vintage, 80s vintage, 70s vintage, 60s vintage. And really the name of the game for us is operational efficiency. For us, it's management and operation is the key. Sure, we are value-add guys, so we invest some dollars in each property and try to get some rent bumps. But for me, dollar in and dollar out means the same thing. So when we are looking for opportunities, we are looking for plays where there's operational efficiencies, where we can be more efficient with expenses, and at the same time that we're looking for properties where there's upside on the rents as well. So in the last 3 years, we have grown our net operating income by over 23%, and half of that is because of operational expense savings, and that really goes a long way. Essentially, what we're trying to do is create a win-win situation for our tenants, our employees, and our investors. So when you look at global markets, right? Which asset class would you rather invest in? Which you look at stocks, you look at bonds, you look at real estate. If you look at the last year's data, real estate was the best performer in the whole United States. So if you look at a TIA CREP allocation, the only investment class they made money was real estate, right? So that's what we're focusing on. So that's a more macroeconomic approach. Is real estate as an asset class that we feel really comfortable with. And when you look at globally, US is still a very, very attractive place where you want to invest. I mean, you look at Europe, you look at Asia, everyone still wants to be in US. With that being said, why Houston, why Texas? I mean, there's a lot of macroeconomic reasons why we picked Houston. You look at from 2010 to 2015, Houston was the number one, had the number one population growth in the whole country. I mean, they added 736,000 people. 2015, we added 160,000 people. Going from 2016 to 2020, we're expected to add 130,000 people per year. I mean, that's a huge number. In terms of supply, yes. I mean, if you take a very short-term approach, you're looking at the absorption wasn't right, wasn't up to the demand. But if you take a medium to long-term approach, I mean, Houston is again at the top of the list, right? In 2016, Houston had the highest number of employment, 3 million total non-farm payroll, which is at the all-time high right now. I think the worst is behind us. Sure, oil and gas is a big contributor to Houston's economy, but I would say that we are a much more diversified economy than we were in the 80s and 90s. Healthcare employs a lot more people than the energy sector does. I mean, healthcare employs 300,000 people, whereas the upstream sector employs 150,000 people. You're looking at petrochemical. I mean, it's going through a $35 billion expansion. Healthcare is going through a $5 billion expansion. So there's so many factors in Houston that contributes to the growth. And I would say that going forward, we continue to be very, very aggressive. We are very opportunistic, and I think we are very excited to be in Houston, and I would say that it's one of the strongest economies, and there's a huge amount of population growth that's coming.
Great to hear. I think it's a